Hi there, this is Trisha, and I wanted to go over the trade that I took today using my setups that I use on 3 charts with indicators to time my entries and confirm entries with indicators. And you can go to www.easyemintrade.com, and this is a conservative way for high probability profitable trades. So anyway, I wanted to start with this is our smaller minute chart, and at about 10:14 our trend indicator was over 20. So at that point, when we get over 20, we start to look for an entry to take, either on our longer tick chart or our smaller scalp chart. And what you want to do then is look at our longer tick chart and see where the price is in relation to the 2 moving averages. And you can see where the green arrow is. We're very close to the top moving average. So I would not go long here yet until we would break out above that second moving average. As I've said before, if there's plenty of room in between the 2 moving averages and you're at least over the white moving average, then you can take a scalp trade if it sets up. I like to see at least 6 to 8 points in between the 2 moving averages if I were going to take a scalp, but ideally you like to see price above both moving averages or below both moving averages, respectively, if you're going long or short. So you did have a scalp trade setting up at that time, but you wouldn't take it for the reason I just showed you on our longer tick chart. And even though we have our scalp setting up, we do not have divergence here on our indicator, so we would pass. We don't necessarily have to have divergence, but we at least want to see it coming from the oversold area and heading up, not already overbought without at least being in divergence. So that's why we would not have taken that 10-14 trade. This is a trade that I did take. We start out, our trend indicator is above 20. We have our scalp indicator setting up. So I hit a market order and get filled over here. You can see price going sideways here and our trending indicator going higher. So once we go from our red dot to our blue dot, after that first blue dot, I hit a market order. And like I said, I got filled over here somewhere. And I would use my trail stop method for my exit. So anyway, I moved my trail stop to here, and got stopped out over here for a small gain of 1.5. So not great, but not a loss, so that's a good thing. And this is what it looked like on our longer tick chart. We were above both moving averages when I took that trade, so that's why I would get in. Again, you go through the same process with every single trade that you're going to take. You go down that checklist that's included in the ebook, and right from 1, 2, 3, 4, just go right down the list and confirm everything is in alignment before you take a trade, and that will help you get in the habit of making sure all those things are in alignment before you do take a trade. So basically, we were going up all morning long. And then we started to come down, and then you start to wonder, okay, well, what point can I take a short? So for me, and of course this is different for everybody, but I like to see us pull back past the 50% mark before I would go short or consider a short. Many people will trade against a trend, but I won't. So again, that's your preference. But the way that I determine if we've broken that 50% mark, and you do not have to be familiar with Fibonacci, but these are Fibonacci lines, and I take the highest point, because obviously we start down, so I want to know, okay, when am I getting to that 50% mark? So I take the highest point to the lowest point, and this actually is pre-market, but I'm using this because this looks like a pretty strong area of support. So if there wasn't a real strong area of support here, I would be more apt to start at 8:30 when the futures market opens. But regardless, this is, and it's all definitely discretionary, but that's how I do it. So anyway, I've got my Fibonacci lines, and 50% mark would be right here where this white horizontal line is. So once we break that, now we're considered to be in a downtrend. And I'm showing you this because the trade did set up just prior to that, and I'm going to show you why I did not take it. So this bar here, when it closes, we're now in a downtrend, technically. At 13:53, we actually had a short setting up, and you can see prices going slightly higher indicator going sideways, so that's divergence. So if everything's in alignment, we could take this short. However, this is at 153. This bar is at 154, has not closed obviously at this point where we just are getting this setup. So we would not take this trade for that reason, because we don't know what's going to happen on that bar that I just showed you. Also, on our longer tick chart, this is the bar that is setting up on our smaller tick chart for us to take that scalp short. So we have not closed yet below both these moving averages. So this bar actually is at started at 151 and did not close until 157. So this bar is not complete when that scalp trade short sets up. So I would be apt not to take that, only because we really don't know what's going to happen. And I know sometimes I have jumped in on things when everything is in very strong alignment, but at this point we're not in a strong trend either way, up or down. So if we were and we got something like this, then I'd be more apt to take it. But we're kind of all over the place, up and down over both sides of the moving averages. So I would be more inclined to pass until I had a good setup. You can see the strong area of support over here to the left of that. So again, we don't really know what's going to happen until this bar closed. So that's why I would pass on that trade, this scalp trade, because obviously it's set up a couple minutes before this bar closed and this bar closed. So again, not a high odds trade. Then we started to go, after we came down, we started to go up again. So then you have to ask yourself, well, now are we in an uptrend? So then what you would do is you would take the high point down to the low point, the new low point from us just being in a downtrend, and then you find your 50% mark, and this white line is where our horizontal line, this is representing our 50% mark. So once we get a breakout above that line, now we're in an uptrend again. So that actually occurred at 3:28, and that's too late in the day for me to start looking for something, because I typically won't trade after 3:30. Again, you don't need to have the use of the Fibonacci lines if you're not familiar with them. You can simply look at the high and then the low, and I mean you can literally just divide it by 2, and then there would be 50%, or you can just eyeball it. However you can determine 50%. It's pretty simple if you're not using Fibonacci lines. I wanted to show you the 60-minute chart, and this is today, and I blew it up so hopefully you can see it. Most of our price action was pretty much just straight across with a very small range right around our moving average. So we don't have any clear defined direction. We're above it, below it, above it, below it. So that's not a really great trending day. So usually on days like that, you're just going to catch a couple scalp trades, because again, there's no clear direction. As you can see, from Friday and Thursday, you have a much clearer direction. It's down. Everything is below that moving average. So this, you just have to take what comes your way, and just be smart about it and don't get anxious. If nothing comes, then nothing comes, and that's what you have to realize. You just sit there and be patient for your trade setups. And again, if you don't take any trades, then you're still going to be ahead of the game, obviously, than if you were to take losing trades just looking for something that's setting up. So anyway, I took one trade today, and it was a scalp setup, and I had a gain of 1.5. So check those out at www.easyeminitrade.com.